This is Eric Moore with Mother.com with a weekend market analysis for June 1st and June 2nd, 2019. We are about 5 minutes away from the close of the week, close of the month, and close of the day. And we can see that markets are pretty much drifting towards the lows of the day. Let's take a look at closing numbers here, give or take, depending on where the market closed. S&P 500 for the week so far, with a couple of minutes to go here, we can see down about 2.5% for the week. For the month, we can see the S&P 500 down close to 7% or 6.5%. Take a look at the Dow for the week, down about 3%, and for the month of May, Dow called down about 6.5%. We can see for the Nasdaq for the week, down about 2.3%, and for the month, Nasdaq down about 7.8%. So a huge down month, whichever way you slice it. Of course, for traders, we are always wondering what the next meaningful swing trade direction is going to be. Towards the last minute of trading, give or take, looks like the S&P 500 is going to be closing towards the lows of the day, and this is typical whenever you see a market drop below RSI 30.9. If it does drop below 30.9, looks like this is going to close pretty much at the lows of the day. Now, one thing we're looking at coming into this week was the 2800 level. Based on last weekend's video, so 2800, and we can see here pretty much, if I draw it somewhere here, as the market comes to a close, right there, there's your bell, and we can see that the S&P 500, if you use this 2800 level, this was, on hindsight, a good entry here, turned into support on multiple occasions, and then we broke down below that level, which is here, turned into resistance, resistance again here, resistance here, resistance, resistance, resistance. Finally, we clear that level, and it turned into support during all these days here. Multiple tests that was successful. We bounced on the same level here. So coming into this week, we had already seen support as of last week, but you can see what happened here. I believe as of Tuesday of this week, we dropped below it, and of course over the last couple of days, net the market's below that level. And of course, you're gonna hear a lot of talk that the S&P 500 ended the week below the 200-day moving average. So that's also something to consider in terms of how the general market is viewing this, with the S&P 500 staying below the 200-day moving average. It's not the end of all things, but the more it stays below the 200-day level, the more a lot of people are going to start leaning towards expecting the market to be lower. If the market can recover back above that level, above the 200-day moving average, then that becomes a sign of encouragement for bullish market participants. So it looks like on the daily, as long as we are trading below that 2800 price level on the S&P 500, and as long as we are trading below the 200-day moving average, net, we can say this market continues to have a bias or might be favoring the downside. If the market can recapture above the 200-day moving average, recapture back above the 2800 level, then that becomes an encouraging setup and might be a reason and a stage for a recovery attempt by the market. Now that the market is closed, S&P 500 did close below 30.9 on its daily, and as is generally typical of that type of an RSI move, you tend to close towards the lows of the day. And true to that fact, we can see a good example here, the market closing pretty much at the lows of the session. Personally, I believe another level to watch is 7505.77 on the Nasdaq, because it goes back to this closing high as of early 2018. Now we can draw a line right there to represent that level, something like that, and you can see how there was a failed breakout attempt here that led to the market moving lower. Actually from here to here, and then it turned into a slight resistance for a while there before finally breaking out above it, which is here. Nice breakout, turned into support here, did not close below it, and then finally we break below that level, turned into a failed attempt to move there, resistance here, and then finally what happens here is we did recapture above the level here. What I'm trying to get at is, in terms of direction, as long as we are below this price, which is where we closed the end of the week, this is suggesting the possibility of the market having a bias to the downside, and at the same time going into the new week, the new month, if we can recapture and hold back above this level, I think that will be encouraging and a sign that the market is poised for a recovery. So again, you can use this number here on the Nasdaq weekly. Anything above that would be bullish. Anything below that price would be a reason to expect lower prices. That concludes the free portion of this video. The rest of the video is for paid Mwathio.com subscribers. Do enjoy your weekend. Otherwise, for subscribers, let's continue on.